Welcome to 55 minutes of current and relevant business conversations here on Business Morning. I'm Ini John McQuan. We start business from the global space as usual. Oil prices rose more than 1% on Tuesday, rebounding after the hefty sell-off in recent sessions, led by concerns that United States tariffs might depress demand and lead to global recession. So we see this morning, it's like a flip from what we had this time yesterday. 1.26% in the green is what Brent is recording, but it's just still under 70. So yesterday it was about $63. This morning we see that $65.02 a barrel. WTI is almost the same, 1.52% in the green at $61.61 a barrel. Yesterday oil lost 2%, nearing a 4-year low because of fears that the United States President Trump's latest trade tariff could thrust global economies into recession and diminish energy demand. However, the market is anticipating a potential limit to the downward trajectory because of oil prices. Trump maintains that the tariffs, which is a minimum of 10% for all imports into the United States, which target rates up to 50%, would facilitate the revival of the U.S. industrial base, which he says has been declining because of decades of trade liberalization, while many countries are seeking an exemption or at least reduction in the tariffs. Some, including China, which is the world's second largest economy after the U.S., have announced plans for reciprocal tariffs. And Trump says he would impose even more on China if Beijing does not withdraw its countermeasures. Should China stand firm, the total tariff rate on its imports to the United States would climb to 104%, a move likely to trigger a further soaring of risk sentiment, steep drops in global stock markets, and accelerate the pace of global economy's descent into recession. Well, we're obviously going to stay on that later on the program. But for now, in London, the 2025 Commonwealth Trade and Investment Summit convened by global leaders to explore emerging market opportunities and drive innovation across the Commonwealth. That started yesterday. The annual event aims to address critical issues and advance business priorities while championing greater trade with Commonwealth nations. And you can be sure that the tariff is one of that. Our correspondent in London, Juliana Olainka, is there and spoke to the Minister of Industry, Trade and Investment, Dr. Jumoke Ojuwole, as well as the Governor of Enugu State, Mr. Peter Mba.
We need to look at what are the key enablers to be able to work within a common market. And that's what, the advantage of a Commonwealth is, because you have a huge opportunity to attract a high impact investment. And that's what we're here to, to basically pitch the state, to show that Enugu exhibits all the right conditions to nurture the sort of opportunities and development that we talk about, the African opportunity.
The changing demographics in Africa necessitates that we build new relationships, that we consolidate old relationships, and we make sure that investors know exactly what it is. Nigeria is open for business. Mr. President has said that since May of 2023, and we continue to make these trips and also to invite investors to Nigeria to prove the point and to support our private sector.
Well, the world is looking for new trade relations and trade routes. I guess conversation goes on. Well, United Capital PLC has declared a profit before tax of 30.10 30.10 billion naira for the 2024 financial year, and that represents 74% increase year on year, while shareholders approved a total dividend payout of 14.4 billion naira. That's a 33% increase from the previous year. At its 12th anniversary AGM, annual general meeting, I beg your pardon, that was held in Abuja, shareholders and stakeholders celebrated the company's impressive financial performance and strategic expansion initiatives.
This is the 12th annual general meeting of United Capital PLC, and the chairman of the company is leading all the members of the management and shareholders at the meeting.
God to kindly lead us in prayer.
United Capital PLC is a financial and investment services company offering investment banking, asset management, trusteeship, securities trading, wealth management, consumer finance, and microfinance banking.
Time by rotation and has offered himself.
In his remarks, the chairman, United Capital PLC, highlighted the company's outstanding financial performance.
Shareholders are requested to note that an interim dividend of 5,400 million naira only, at the rate of 90 kobo per ordinary share, was earlier paid to all shareholders whose names appeared on the register of members as of July 31st, 2024, for the half-year ended June 30th, 2024.
A motion was then moved to adopt the recommendation of the directors and also approve the recommended dividend for shareholders for the close of business for the year 2024.
I hereby move that a final dividend of 9 billion naira only gross in respect of the year ended December 31, 2024, that is 50 kobo per share, be paid to all shareholders.
The group CEO of the United Capital PLC attributes the success achieved in a year to effective management and leveraging opportunities.
The main objective is to ensure that we continue to increase the value to our various shareholders, and we have done that, standing by our words, which is critical.
Some shareholders spoke of their satisfaction and expressed how impressed they are with the success of the company.
Okay, the company is perfect, and I'm thinking by next year they are going to pay more than what they are paid to this year. So it's a thing of joy to be a shareholder of this company.
I'm very proud of United Capital PLC, and I want to advise Nigeria, invest in United Capital if you are not yet a shareholder.
Riding on the success of the report, the management plans to create more visibility for the company.
Right now, we have permission, regulatory approval to operate in some 13 African countries, and we're going to expand that over the course of the year.
Looking ahead, United Capital PLC says it is committed to expanding market leadership, enhancing innovation, and driving long-term value creation as it continues to set new standards in Africa's financial sector. Benny Ark, Channels Television News.
Yes, back to that all-important issue of the tariff. In response to the U.S. President Donald Trump's 14% tariff on Nigerian export, the federal government is considering a reset of its economic strategy, including review of key assumptions under the 2025 budget, such as oil. We know Brent, we saw this morning, just about $65. Meanwhile, for our targets in the budget, it's 75. And then when we look at the value of the naira to a dollar, we have 1,500 now. Yesterday we saw a huge drop in the naira. That started on Friday in spite of the intervention from the central bank. We saw the naira is lower than 1,600 now. And the conversation now is how to maximize some opportunities that may be coming in spite of these headwinds, and how to strategize to shield the Nigerian economy from some of the harsh realities that may be coming from this tariff. We have to discuss this. Mr. Bismarck Rwani, the Chief Executive Officer of Financial Derivatives Company. Mr. Rwani, good morning and welcome to the program.
Good morning, Linia. Thanks for having me.
So I think there's a lot of weighing going on about the tariffs, the opportunities versus the risks for Nigeria. Which one outweighs the other?
I think first and foremost, we need to understand what has happened. On the 4th of April, Donald Trump introduced the tariff, started the tariff war, and the markets lost 5% on the 3rd of April, lost 6% on the 4th of April. So in all, about 11 to 12% was wiped off market capitalization across global markets. Now, today, we've seen some recovery. Of course, first and foremost, also, the Chinese now responded with a 34% tariff threat. So we've seen some recovery today, about almost 1% in the markets in the Far East, or 1 or 2%, but that's far from it. The big thing is that the uncertainty triggered the fears of a recession. So what is happening now, the fears of a global recession as far outweighed the uncertainty in terms of what the tariff structure is. Now, today also, I think the Chinese have affected their currency. The Chinese have embarked on what we call competitive devaluation. They brought their currency down to its lowest level in many years. Therefore, if you are buying goods from China, in spite of the tariff, you are going to, because the currency has fallen in value, you are going to be seeing the Chinese goods becoming cheaper. Now, Donald Trump has said that if the Chinese do not back down, he's going to slap another 50%, bringing the entire thing to about 126%. Having said this, let us ask ourselves, what is the likelihood that things, what are the things that can change the trajectory? One, will Donald Trump suspend the tariffs? Very unlikely that will happen. He will suspend them in tranches. Two, will the Federal Reserve Bank of the United States bring down interest rates so that that can trigger an increase in stock prices? I don't think the Federal Reserve Bank is going to do that because it will lose its independence and credibility. So what we are seeing is we are going to be seeing a slow but steady Donald Trump beginning to ease off on some of these tariffs. But meanwhile, the uncertainty and the fears of recession have become very palpable. And that is where the problem is. If there's a recession, and you've seen it already, that the price of oil has dropped to 60, 65, Brent is about $64 a barrel, which is $10 below our benchmark price and really hurts countries like Nigeria who are exporters. We've also seen the price of gold decline and the value of the dollar decline. Normally, the price of gold, when there's an inverse relationship between the price of gold and the value of the dollar. So again, we are in an uncertain world. So all of this point to the fact that we do not know what's going to happen next, but all we do know is that commodity prices are going to fall sharply, that the price of borrowing, because of the risks that are there, price of borrowing by countries like Nigeria and corporates like Nigeria is going to be higher. And then we are back into the situation it happened in 1998 in Southeast Asia. It happened in 2008 during the Lehman Brothers crisis. It happened during the COVID crisis. Is there going to be coordination this time amongst regulators and policymakers to ensure that the world doesn't suffer? It's yet to be seen, but I think that, generally speaking, this is a short-term disruption. And over the next month or two, we'll see some settlement, and then things begin to stabilize. So I wouldn't panic. As a matter of fact, people are now beginning to buy into the market because they think that stocks are very, very cheap.
So you don't think there's a need for review of key assumptions by the federal government of Nigeria? I mean, when you see the difference in the oil prices and now the Naira has lost more than 2% or so.
No, I think that you say long-term you look for value, short-term you look for direction. The direction shows that there's a problem, but it's a problem for everybody. It's not just Nigeria. And therefore, we could begin to have, I think what we have is a scenario-based budget. If the price of oil drops to 65 and stays there, this is what we have to do. But Nigeria is very, very clear about borrowing, limiting its borrowing because its cost of borrowing is pretty high. And therefore, some benefits, some of the policies that have been implemented or introduced, which will actually make the price, which will make our spending not go haywire. Those are the things that we need to worry about now. How do we rein in our spending, and how do we actually motivate investors to come into this market? I think I wouldn't bother too much about the effect on the Nigerian economy because it's global, it's across Africa, and it will blow over in a couple of months when things stabilize.
All right,
Okay.
Go ahead, Mr. Rani.
Okay, now, so let us take a look at some of the things that happened. The price, the Naira depreciated. I think that's an adjustment which the Nigerian government or the central bank is doing, which is right. It's depreciated at the official market, and the central bank has put in about $180 million in the last 2 days into the market to keep it stable. The price of cocoa has fallen by 6% of our $7,994. Nigeria hopes to raise its production in the next 3-4 years to 500,000 tons. We are doing 250,000 tons per annum. Again, the global stock markets are in turmoil. The Nigerian stock market also fell. I think that we are overreacting here. In the retail market, Nigeria's price of petrol, PMS, is now at 930, while diesel is at 1,080 to 1,100. But what we've seen recently, the last few days, is that domestic commodity prices have begun to increase. Most notably, after the fasting, we've seen a 20% increase in the price of tomatoes. We've seen an increase in the price of peppers, and we've also seen an increase in the price of palm oil. There was a decline of 2% for vegetable oil to 19,000, and rice is at 85,000. So what are we seeing? We are seeing commodity prices, food commodity prices begin to increase, driven by the fact that the planting season is here. We also begin to see that there might be an increase in the rate of inflation, which because of the increase in the price of petrol. But we haven't seen a corresponding increase in the price of transport fares so far. So, but one interesting thing that we must note is that many of the firms are now beginning to release their results, and the Q1 results are showing profitable operations. They have not wiped up the losses of the previous year, 2024, but we are seeing on an ongoing basis, both in the telco sector, in the brewing sector, in the food and fast-moving consumer goods sector, we are beginning to see increase in the price, increase in revenues, increase in sales, and people are beginning to settle down to accept that the worst may be over.
Yeah, but
the worst may be over.
Mr. Arani, can we say the worst is over? I mean, we thought the worst was over, but with the recent happenings and all, it does seem that not just Nigeria, though, but the days of high inflation may just be very close to us.
Well, this time, the changes that are happening are self-induced. That is, the United States has disrupted things with their policy initiatives. The United States, I think, will reverse some of those decisions when it begins to impact everybody. We are in a political system. In 2026, there's going to be midterm elections. So I think the United States is going to actually begin to retrace some of the steps, but without giving in totally. There was a reason why the Republican Party and Trump decided to alter the current infrastructure, what I call the architecture, the global financial architecture. Will they achieve everything? No, they will not achieve everything, but they will achieve a little bit, and that little bit will tilt things in a particular way. The U.S. economy is a service economy, so even if you impose tariffs, they're not tariffs on services. They're not tariffs on services. So we are going to see that most of the reactions of the market and the reaction of people it's kind of exaggerated because of the fear of the unknown. But I'm saying, and I think so, that the global markets will stabilize. The U.S. will backtrack on some of those policies, and that some of the changes that are good for the global economy in the long run will take place. But having said that, there's no substitute for the fact that countries like Nigeria have to press the reset button, have to use this opportunity to create stability in their own domestic and make the economies competitive. And that's where it is. So one, there should be institutional reform within Nigeria. Two, that Nigeria should accept the reality that we are not a rich country, but we are a country that has the potential of becoming rich if we do the right things. And we've heard this potential story for ages. Now, how do we convert potential into action? That's where we are, and that's the pressure under which Nigeria is having to deal right now.
Yeah, and some people have said this is the time to actually use the opportunity and convert those potentials to reality. But I mean, as you noted, it's a conversation we just keep having. Hopefully one day the story will change.
But let me say something, Nini, that we have to measure the steps we have taken so far. In the past 10, 15 years, we've moved closer and closer towards equilibrium. But also, we have also engaged in a lot of wasteful activity. So if you can reduce the waste and become more accountable, and at the same time become more efficient,
I can hear you.
The story begins to change. Until we do that, we are just going to be running,
okay. 1,
running around
2, 3, 4, 5. 1, 2, 3, 4, 5.
All right, Mr. Rwani, thank you so much. Apologies to our viewers. That is Mr. Ojidemezue, the next guest for the program. Some technicalities going on behind there. Apologies, Mr. Rwani, and to our viewers. But thank you so much, Mr. Bismarck Rwani, the Chief Executive Officer of Financial Derivatives Company, for your views this morning. And yes, we all hope that one day we would change these potentials to become realities. And as you have said, perhaps this is the time to measure the impact of the reforms so far, so we can know what length we have covered and which one that's left for us to cover. Thank you so much, Mr. Bismarck Rwani.
Thank you for having me.
Let's take a break now. Well, I guess the cat is already out of the bag, and then we'll have Mr. Ojidemezue joining us from our Abuja studio, but that's after the break. Just stay with us. Yes, it's still Business Morning here on Channels Television. Let's go into the world of Zenith Bank, their full year results 2024. Of course, before now, you have heard snippets of it, but now we're delving into the numbers proper with the Chief Executive Officer of Film Consulting, Mr. Ojidemezue, joins us from our Abuja studio. Mr. Demezue, good morning and welcome to the program.
Morning, Ini, and thanks a lot for inviting me. And I hope you're doing well over there in Lagos.
Yes, we are. Thank you so much. I trust you're doing same. So we're discussing Zenith now. We've seen a lot of impressive numbers coming from Zenith as well as other banks. But we saw that the profits is really looking good, the revenue looking good. I think the first thing that people will ask is, where did the FX losses go to for 2024?
Where did what?
So the FX losses, FX. You know, we had a lot of FX losses recorded.
Okay, FX losses.
Yeah, we don't seem to see it in the books of a lot of banks.
All right. Of course, you know, usually you have the top line of a bank, and then you have the middle line where the expenses, some impairments, and so on. Are located. I also saw that of Zenith. But what matters a whole lot in the end is, by the time you take care of your cost of doing business, impairments and other charges, what is your bottom line? So taking it from the top line, Zenith has continued to show very strong leadership in the financial services sector, not just in Nigeria, but the rest of Africa. And in fact, even in the operations in the UK, UAE, China, and even now France, with branches coming up, or subsidiaries coming up in Senegal and Cote d'Ivoire. If you look at their figures, you see a very impressive growth, in their gross earnings. That's the very topmost line in every bank. 3.9 trillion is not a small figure, and that is driven by 138% increase in their interest income, net interest income, or what you call net interest margin, or otherwise net revenue from fund, which is a very strong showing, that the bank is involved in proper financial intermediation in the economy, collecting deposits from the surplus sector and giving different kinds of loans to the economy. So to drive interest income, to the extent of 130-something% increase means that the bank is deeply rooted in core commercial banking, retail banking, SME banking in Nigeria. And of course, non-interest income also grew, by over 20%, giving you a very impressive 67% growth in the bank PBT. Now, I've talked about top line. The midline is where you see all of those FX loss charges, impairments on loans, and so on. And then the bottom line also had a very strong showing. You can imagine a growth from about 790 billion in PBT to 1.3 trillion, about the largest, the most profitable bank, currently in Nigeria. 1.3 trillion. If you compare that to figures we talk about in Nigeria revenue, it's a very significant part of the Nigerian economy. And this bank, in the past year, paid the federal government of Nigeria over 300 billion in taxes. Imagine that. So if you have a few Zenith banks in Nigeria, it means that our fiscal challenges in Nigeria will be well solved. This bank is providing solution not just to Nigeria, but the whole of the economy. They provide solid loans to the commercial banking sector, SMB retail sector, helping even agriculture to grow, to provide food and so on. The data are so impressive. And taking it from the interest income, like I mentioned, it means that the bank is doing core banking business, not just arbitraging, through the treasury activities, buying and selling of, fixed income securities, FX, bonds, and the rest of that. And they're also doing very well there. If you look at that line, they posted over $1 trillion on that line. But the point is that while they do that part, because banks actually do two major businesses, banking business, that's deposit and lending, and also trading business, trading in all approved money market and other fixed income instruments. So Zenith Bank is showing great leadership in the banking sector in Nigeria. Of course, the bank, is the most capitalized bank by Tier 1 capital in the country. Having about 3.2 trillion capital and overall shareholders fund or shareholders equity of 4 trillion. And this is compared to the minimum capital requirement of 500 billion now required by central bank, ahead of March 2026. Currently, what they need to operate as an international bank is 50 billion, and they're having 4 trillion. So it's a forward-looking bank with a very strong showing in all parameters, financial and non-financial. As we go on, I will roll out a few more financial and non-financial information about the bank, because for you to analyze the banking sector, you must speak along CAMEL, capital adequacy of the bank, asset quality of the bank, management efficiency and capability, stability of management and all of that. And the bank's earnings have just dealt with their earnings capability, overwhelming capability in their earnings, and of course, increasing liquidity, looking at the bank's recent strong show in their capital raising, achieving over 160% response from investors in their recent capitalization, which CBN mandated that all banks must go through. Why do they have to raise more capital? Looking at the CBN's requirement, because CBN insisted that the capital must be, core. Can you hear me, Ini?
Yes, I can hear you. I just wanted to ask about the loans, because there's been conversation about how difficult it's become for banks to actually get very active in the area of loans because of the CRR, which is at around about at 50%. How has Zenith Bank been able to manage that part of its operations?
All right, banks must be very technically sound to understand the environment where they operate. Nigeria is a very tough environment to do banking business. Like you mentioned, because we've been grappling with very intense inflation. The central bank, in their effort to rein in inflation, has continued to raise rates. The MPR has moved over 800 or 900 basis points to now 27.5%. Moving rates up. Even the central bank instruments have all gone up. And then the CRR, the cash reserve requirement, which means that out of Zenith Bank's over 20 trillion in deposits, almost half of that, theoretically though, should be in central bank as CRR, sterilized, not available for business. So that has actually led to general increase in interest rates in the banking sector as a whole. Of course, Zenith Bank, having a very strong treasury, also had to reprice their loans. So without repricing, they had marginal, a great advantage in their interest income. And of course, CBN also gave some other technical leeways for banks to escape the CRR. People may not understand that, but when you look at it, you find that if you can, if you're very strong in retail banking, giving loans to SMB and so on, there are ways you can leverage even your CRR. That's the reserve fund in the central bank's reserve account. You can leverage on that to give loans that support the economy in agriculture, SME, and so on. And trust Zenith Bank, they use all of those opportunities to ramp up their lending to the real sector of the economy, helping agriculture and other non-oil sectors, to grow. And by the way, they're also very, very strong in the oil and gas sector, leading the way in lending to key performance in that sector, both IOCs and our own local operators like Wando and the rest of them. And this bank boasts of more than 35 million, about 34.5 million customer base in Nigeria and the rest of the sub-Saharan Africa and of course elsewhere around the world. it's a bank to watch for the future, giving value. And when we come down to management level, I will show you other, non-financial performance of Zenith Bank running on sustainability with all manner of awards. I can't stay here listing all the awards, both from the local award givers, the global award givers, world finance institutions, and so on. So it's a well-awarded bank. The list of awards, if you go to their website, is innumerable. You can't mention them. Best bank, bank of the year, best in technology, best in all kinds of parameters. So it's a bank to watch, and it's a bank to take a position, for the future.
All right, so I think another thing that Zenith Bank seems to be really active is this the environment and social and governance category. We've seen them get also some awards from there, and they continuously say that, well, they are committed to it. Perhaps you can share with us some of their strategies and achievements in that area.
Okay, now let me take the issue of management. Zenith Bank has a team of long-standing, very well-respected management, led by the chairman, Jim Ovia, who is a very big legend in the banking sector beyond Africa. And of course, our dear, very charming, adorable and beautiful and intelligent CEO, Dame Dr. Adora Umeoji. And a whole lot of people, both the independent directors, executive and so on. And then if you drill down, even in that board, you have over 30% of women, showing that Zenith Bank is a bank that wants to empower people, including women. I'm talking about sustainability now. I'm getting to ES and G. Okay, so you look at that, even in their staff strength, I understand that more than 50% or about 51% of their staff are also women. Very well motivated, very well paid, very well trained, and so on. And the top management from AGM and above are also over 32% women. So Zenith Bank is a sustainability thinking bank. If you look at the Nigerian Sustainable Banking Principles, which all the banks signed in 2012, Zenith Bank has led, the performance of that principle in several, what do you call them again, pillars. If you look at the pillar of ES and G that you asked me, that's environmental, social, governance. You find that the bank is also leading, both in their report to CBN and in their activities in trying to promote the environment. Even in their lending activities, the report I read about a year ago when I did a consultancy job on that ESG for a client, you find that Zenith Bank, looks at their loans to ensure that they are environmentally sustainable, because there's no business that can go on in a dead planet. So the bank is consciously working towards ensuring that the planet is good, even while we do business, So in their loan activities, they look at environmental sustainability and their compliance in that area. Social governance, building women, creating prosperity in the environment, giving loans to agriculture and so on to improve, economic prosperity and minimize poverty. They are very big in that area. And of course, looking at gas emission, energy usage and so on, the bank has made so much investment to ensure that they approach net zero banking position as much as possible. It's also a member of the UNEP, FI, that's the United Nations Environment Program Finance Initiative. They are driving leadership in that sector, spending money to ensure that less emission of gases and all kinds of environmentally damaging impact are lessened by the bank. So the bank is a forward-looking bank using innovation and technology to drive performance. Building very strong architecture for digital banking solutions and all the products that will enable the environment survive. Ensuring that staff are not always driving around, moving staff together in the buses and other activities, minimizing meetings, physical meetings to reduce the amount of carbon dioxide that we, so, and that's where business is going to. At some point in the near future, you won't be able to access some on-lending facility from the likes of, international finance, bodies if you're not a net zero or an approaching net zero bank. And Zenith Bank has seen into the future, and they're doing everything possible to be sure that they represent Nigeria and Africa when it comes to sustainable banking. Whether it's about environmental sustainability, social governance, or empowering women, education and training, and all of those areas, the pillars guiding principles of responsible banking.
And talking about forward-looking, what's the strategy? We have many banks. How can Zenith Bank stand out? Talking about strategic growth at this time.
Zenith Bank was established sometime in 1990. And that's how many years now, right? Help me. That's about 34, 35 years. The bank has been growing sustainably, consistently in all parameters, financial and non-financial. I've given you quite a few. I've only rolled out the figures for last year, but if you look at these years of operation, the bank has consistently grown in every parameter. Why their branches are still around 400, above 400 branches, is because now emphasis around the world is now going towards less of banking hall footprint. That's brick and mortar banking. The bank is now leading, the pack in agency banking and all other digital solutions because, as you are aware, when people had some little glitch in the services, they were not aware that the bank was, working under the background to, build a very robust architecture for the banking software. Looking at the fact that they're now moving, into the African market much more than ever before. I expect that in a few months or years, we'll begin to see their footprint in East Africa and, of course, Southern Africa. They are trying to dominate, West Africa, which they have almost done right now. Vision is stage by stage. I see Zenith Bank now doing a whole lot in East Africa, Southern Africa, and maybe, the North Africa, where they work more with the Middle East. So the bank has always been strategic, having a crop of leaders who are always thinking ahead and who have also found the grace to stay over 20, 30 years in the bank. There is some kind of stability in the banking, in their staffing, both lower management, middle management, and top management, showing you that they are able to run their thing in the foreseeable future. If you also watch, you find that there's low attrition there, and over the years the bank has elected or appointed MDs successively, even from within themselves, showing you a very strong succession planning in the bank. So if you look at all these parameters and all the strategies they adopt, both in their banking products development, in their trading activities, in management. I told you about Commonwealth. I'm coming to capital adequacy. It's one of the most capitalized banks in Nigeria, and not just being capitalized, having very strong long-term stability in terms of solvency. A capital adequacy ratio well above industry level of 15%. Zenith Bank is about 25.5% in capital adequacy ratio. That means a whole lot in terms of availability of capital to defend their risk positions. So the bank is strategic, and they are working in line with the central bank rules to ensure that they lead all the parameters. People think that banks are very good only when they are big, with many bank branches all over the place. But bigness, in quote, or stability and excellence is found in that thing I mentioned earlier, is the bank capitally adequate. The bank is very much capitally adequate, well above the industry level, even above Basel Accord level of 10%, at 25% and more. Asset quality, the bank has remained over the years below 5%. What that means is that if you look at the whole bank's total loans, the percentage that has some concern, whether it's substandard, doubtful, or loss, is not more than 4.7% in Zenith Bank. Because that is what is allowed by central bank. A bank must be below 5%. And they have consistently maintained below 5% all through their 35 years journey. So it's a bank that is looking at risk management with very strong focus, whether it's about credit risk, or market risk, or liquidity risk, or operational risk, or fraud risk, or reputational risk. They have packaged themselves and continue to manage risk in a way that the bank will remain the bank to catch in the future.
All right, Mr. Ademezue certainly came in blowing a whole lot there, information on Zenith Bank. Thank you so much. Managing Consultants and Chief Executive Officer of Flame Academy and Consultant Limited, Mr. Oji Udemezue.
Always my pleasure, to be on your show. And thanks so much for inviting me. I'm enjoying Abuja. Have some work going on here, but we'll soon be back to Lagos, our dear Lagos.
Okay, we hope to have you back soon too. All right, we're talking about banks. Let's go outside the country. I think we'll have some reactions from all of the tariff issues and banks. So while Zenith Bank has some good results, I don't know if other banks
outside the country are having good deals. Some of them are seeing
because the wind of TT, Trump tariff is still
we're doing a TT. Oh, that's nice. You know, Mr. Iwadi was speaking about, you know, China's response. You see the yen weakening, you know, just to make sure that they get back at Trump. And, you know, they're taking a really hard line. And, you know, see Deutsche Bank also revising UK's GDP growth. So let's just take a look at that and see more coming out.
Yeah, you know, just before you go, you know, when Mr. Irani talked about how the yen is now weaker and the commodities cheaper, and I'm like, oh, Nigeria, an imports-driven country, can we use this and load up some of those commodities? I mean, I don't know. I'm just thinking of my head.
Well, the commodities have to meet standard, international standard, to be able to, you know, skills. So let's just, you know, delve in and see what's happening in the global space. Deutsche Bank has forecast a 0.1% rise in UK GDP for February, following a 0.1% decline in January. Now, in the country, the growth is driven by the services sector, with manufacturing and construction also showing slight increases. However, the bank warns of risk, particularly from Trump tariffs, which could reduce GDP by up to 0.6%. For Q1 2025, Deutsche Bank expects 0.3% growth, aligning with the Bank of England's forecast. Though risks remain, a revised update will be provided later this week. Now, let's look at Elon Musk. The social media platform X will enforce new rules for parody, fan, and commentary accounts starting April the 10th. Now, these accounts must clearly label themselves as fake or parody at the beginning of their account name and use distinct profile images. The update is aimed at reducing confusion and impersonation on the platform, especially after repeated complaints about fake Elon Musk accounts. X is urging the users to comply before the deadline to avoid penalties. Now, this move builds on earlier efforts to label parody accounts. Though critics argue they haven't been effective, the EU even warned that some verified accounts may still mislead users. To the U.S., investors looking for safe havens are now turning away from U.S. Treasury bonds, which have long been the go-to option for global funds. Yields on the 10-year Treasury notes have sharply dropped about 40 basis points this year, showing weakening demand. The decline came after President Trump's new tariffs raised fears of a recession in the country, briefly pushing yields below 4% on Monday. Let's see what Vietnam has in store for us. It's planning to buy more goods from U.S., including defense products, and has asked for a 45-day delay on new U.S. tariffs to allow for talks. Prime Minister said this earlier. Now, the U.S. cited concerns like seafood dumping and IP theft. Vietnam may adjust its trade deal and review its policies to address these issues. Vietnam also wants faster delivery of U.S. planes. Its stock market has dropped nearly 14% since the tariff was announced, but we've seen some rebound in some of the markets in Asia. Now, Singapore is launching a task force to manage rising global trade tensions that could hurt its economic growth. Prime Minister Lawrence Wong announced this. Speaking to lawmakers, Wong said the new U.S. tariffs set to begin soon are likely to impact Singapore's GDP, adding that the measures are unfair and not the actions of a friendly nation. He argues that if tariffs were truly based on trade balances, Singapore, which has no surplus with the U.S., should be exempt. Let's look at China. China has vowed to fight to the end against new U.S. tariffs, with Trump threatening a 50% duty unless Beijing removes retaliatory levies, pushing total U.S. tariffs to 104%. China faces pressure to respond, as analysts warn further hikes could derail its economic recovery. The government condemned that U.S. stance, calling it blackmail and stressing its commitment to protecting its interests. Efforts are underway to shield China's economy, but tariffs target key export strategies, complicating recovery. Now, also over the weekend, we saw that China rejected Trump's tariffs, made that really clear, urged the U.S. to stop using tariffs as a weapon to suppress China's economy and trade and stop undermining the legitimate development rights of the Chinese people. Asia's export powerhouses, including China, Japan, South Korea, and Vietnam, have been among those being slammed with the steepest duties. Trump has imposed 54% tariffs on China since he took office. Sayaka Shiba, senior country risk analyst at Fitch Solutions BMI, joins us virtually from Singapore. Good evening, Sayaka. It's good to have you on the program.
Good evening.
Considering the steep tariffs imposed on China's exports, particularly now that we're seeing it at 54%, how do you assess potential long-term economic impact on both China and the U.S.?
We think the trade battle between the China and the U.S. will have a significant negative impact on both U.S. economy and Chinese economies. For Chinese economy, we assess the 54% tariff, or could possibly 104% tariff, in theory will wipe out all the Chinese export to the US because they are no longer profitable. And in the worst case scenario, we expect the GDP to slow down to 3 to 3.5%, which is significantly lower compared to the government official target of 5%. And for US economies, our US team has revised down our annual forecast for 2025 from 1.9% to 0.7%. Because the tariff will likely to increase the inflationary pressure. And we estimate the inflation will likely to increase to almost 4% by the end of third quarter of this year.
Okay, so we've seen China take a stance, is going hard on the U.S., but we've seen other countries, we've seen countermeasures from them. But how about other countries like Japan? How likely are they to respond to these tariffs? What has been the response so far from Japan and the rest of the countries in Asia?
Aside of China, Asian economies will have no intention to take any aggressive action to U.S., no intention to retaliations. Instead, they are likely to engage in the negotiation with some possible concession to the U.S. It is because the U.S. is one of the major security and economic partners for Asian developed economies like Japan, South Korea, and Taiwan. And for other Asian emerging economies like Indonesia, Malaysia, Philippines, U.S. is one of the major investment and trade partners. So worsening the relation with the U.S. is not an ideal option for these countries from the perspective of their long economic growth focus.
Okay.
And specifically for Japan, which have faced a 24% reciprocal tariff and 25% tariff on automobile sector, which is the main sectors, the government already announced that they have no intention to escalate the situations. Last night, the Prime Minister Ishiba spoke with Trump and agreed to continue their bilateral negotiations. Japan will send a special team to the White House, and we expect that Japan needs to make some concession, but eventually we're likely to secure some tariff reductions. And same for Vietnam, which faced a 46% tariff. The negotiation is already ongoing, and the Vietnam already showed their willingness to decrease the tariff to U.S. imports from current 9.4% level to 0% level.
Okay, so you've said now that countries like Vietnam, Japan, and the rest of them are not willing to retaliate, but go to the table and negotiate the terms, maybe reduce their tariff levels. But looking at China's stance right now, if they continue this trade war with the U.S., what are the risks of a crossfire? Won't these countries that have decided that they're not going to retaliate, won't they be caught in a possible crossfire here?
Actually, the Asian economy will likely be hit the hardest from the trade war between U.S. and China because they have a strong economic reliance on both U.S. and China, two superpowers. They have a heavy reliance on their trade and investments. And we specifically see four main risks. The first risk is that the Asian economy will likely to see a significant decline in exports to the U.S. and China because we expect this economy will likely to slow down. And second, we also expect the worsening on fiscal balances in Asian countries because the government tried to increase the fiscal spending to offset some of the export loss. And third, we also expect possible excessive inflow of imports from China because Chinese companies try to divert their export destination from the U.S. to Asian economies that will likely to put some of the crowd out in domestic production. And fourth, we also expect some of the financial instabilities. And upon the tariff announcement, some of the Asian currencies, like Indonesian rupees and Vietnamese dong, face strong selling pressures. And the Hong Kong Stock Exchange also saw the biggest decline since 1997, the Asian financial crisis yesterday. So we also see the risk in the financial sector.
Okay, so all this is on the table, out in the open for everyone to see. But do you believe that the Trump administration is ready to consider negotiating exemptions, if any, or to even reduce the tariff for some of these countries, especially in Asia, where the tariff rates are a bit high? Or do we expect to see this evolve into a more entrenched trade war?
It's quite hard to predict now, but we believe that there are some space for the Trump administration to reduce tariff for some countries who chose not to retaliate against U.S., including the Asian economies. But I think the negotiation will take time, and we do not expect a 10% blanket tariff likely to be removed. So overall, it's pretty much negative impact for the Asian economies. And whether that is going to be a trade war depends on the response from the EU also. So if the EU decided to choose a retaliatory path, that is also going to increase the chance for the global trade wars, and that will be pretty sure about negative impact for all countries involved, including US and of course in Asia.
We do hope that these countries come to an agreement with the U.S. and end this global trade war. Thank you so much, Sayaka Shiba, Senior Country Analyst of Fitch Solutions, BMI, from Singapore. Thank you for joining us again.
Thank you.
So, Ini,
she was talking about the EU there. Yeah, there was a meeting yesterday, and later on Business Incorporated, we'll get details of what the EU has decided. We know that the EU has been hinting on retaliatory path, especially looking at the services, that come out
of the EU, to the US.
Exactly. So we'll see.
We'll see what really happens, especially, right, they said Trump doesn't listen to anyone but himself. So let's just hope.
Well, time will tell. Time will tell. I mean, every country depends on another country one way or the other.
Right now, like, he's taking the protectionist stance, and let's hope that it doesn't backfire.
We'll wait and see. Thank you so much, Will. Talk to you later.
Okay.
So, yeah, that's it. EU by 1 p.m. during Business Incorporated. You can join us then. We'll get updates of the meeting that they had yesterday on the path that they've decided to take in response, to the President Trump's tariff, which affects every country in the world, the least of 10%. Right there. But just before we let you go, I believe we can tell you that yesterday it was still a bloodbath, even though Mr. Rwani has given us a hint that the markets are recovering, I believe, from the Asian markets this morning. But the NGX yesterday closed deeply in the red, 1.23% down. We've gone down to 104,000 level. Our equity cap, 65 trillion naira, no longer 66. Activity yesterday was just the volume made it to the green. Others were in the red, I believe. And then top gainers yesterday, VFD Group, Total, and Guinea Insurance. They were the top gainers. The top losers, on the other hand, O&O, they really dragged down the market yesterday. The strongest of those three of the top losers. So they lost 10% yesterday. Cornerstone also lost, as well as NSL, but we know, talking about those that have a lot of impact in the market. Top trades were from the financials, FCMB, Fidelity, and GTCO. They top trades yesterday. So let's hope that we would see a reverse of that sentiment at intraday. We'll give you that information and a whole lot more at 1 p.m. during Business Incorporated. I'll be back with Will Ebong. So, well, thank you so much for being a part of this 55 minutes of current and relevant business conversations. We'll have updates at 1 p.m. I'm Ini John Mekwa. Talk to you then.